Happy Monday, everybody. Welcome to the Daily Trader. I'm Alex Coffey in for Kevin Hanks. Today we're going to look at two social media names on the heels of an upgrade in Pinterest. We're also going to look at Meta. Both stocks got off to really hot starts in 2025. But as the market topped and worked its way lower throughout much of February and early March, so did these names. Both names, nice little moves here today. Let's start with Pinterest, looking at a bullish example trade in which we will look at a call debit spread in the April monthly expiration. What we're looking at in particular for our strikes today is the 32.5 call and the 35.5 call. So it's a $3 wide spread. Looking to spend $1.50 for the debit. That's what we're looking at for our example trade. With that, for that $1.50 debit, you'd have $150 in risk to the downside. That would take place if the stock fell below 32.5 at expiration. And then a max profit potential, also $150 if the stock were to rally above 35.5 and stay there through expiration. Break even on this trade, you simply add the debit to that long strike and you'll get a 34 break even. As you look, pretty close to the current share price for Pinterest. So some of the loose guidelines that we look at for those debit spreads: equal risk to reward and a break even near the current share price. It accomplishes just that. So as we shift gears and look at its peer within the social media space, the biggest player in that space, Meta Platforms, parent company both of Facebook as well as Instagram and WhatsApp. Looking at Meta, we're looking at another trade that actually has a max profit potential for this example of $150, but how we accomplish that and how we get there, a little bit different. This is a neutral to bullish construction in which we sell a put vertical below the market. Remember, Meta had a huge move earlier in this year where it was up some 20 straight sessions before giving back much of that move, if not all of that move, in recent weeks. Looking for the stabilization in the stock, selling the 600 595 put vertical in April, looking for a $1.50 credit. As long as it stays above 600 through that expiration, and on that expiration date you have a chance to make, again, $150 on this trade, but you'll notice a little bit more risk on this one with $350 as a max possible loss. And it goes to show, with a $598.5 break even on a stock that is currently trading at $620, you take a little bit risk versus that, a little bit more risk than that reward potential for that lower break even and higher probability of success. So two different ways to look at two different social media companies here on this Monday. Thanks as always for tuning in to the Daily Trader, and we'll see you tomorrow.